Will Coursera become an edtech giant by taking the lead in transforming how we learn and where we learn? Or is it just a lemon? Well, let's dive in. What's up, guys? Welcome to Bullish Bets. On this channel, we cover all things related to stocks and investing. This video, we're going to discuss Coursera and their IPO on March 31st, 2021. Keep in mind that we are not financial advisors and this video is for entertainment purposes only. Make sure you do your own research before making any investment decisions. So Coursera is going public under the ticker COUR. And this video, we want to do a dive onto whether it's a good buy or not. First, we're going to talk about its business missions and reason for being a business. Second, we're going to talk about who the product's for. Next, we're going to talk about what makes them stand out following their opportunity and then their growth plan. We're going to talk about some risks. And then we're going to dig into some financials. And lastly, we're going to talk about, is it worth getting into Coursera, whether it's a good play or not. So let's get started. So the business mission of Coursera and the reason for business. So what they want to do is it wants to provide universal access to world-class learning so that anyone, anywhere has the power to transform their lives through learning. And why would people need this? Their argument is that people need to be retrained and reskilled, as over 200 billion jobs are at high risk of disappearing through automation and so forth. With COVID going on, it exacerbated that. Traditional classroom-based education, according to Coursera, the model can't keep pace with emerging skills required in the workforce. People who went to school around 10-20 years ago are going to need new skills. Like I mentioned in my previous video on Upstart, they're transforming the whole banking business. Underwriting in itself might be obsolete with AI technology. And what Coursera is doing is it's helping these people who had these jobs back then that aren't needed anymore to reskill them. So that's their goal. So who is this product for? Let's talk about who this is for. So it's for individuals, a wide variety of content. It's a wide variety of content that allows people to learn at their own pace and achieve their goals. There's a bunch of courses online that allow, individuals to build skills in terms of marketing, business, whether that be video editing and so forth. It's just a lot of courses where people have access to that they wouldn't have before. Just a whole catalog of self-learning that will change many lives and upskill a lot of workers. On top of that, they have professional certificates, master track certificates, and they have degrees that they can offer people, whether that be some master's degrees and so forth. And what they also focus on is they benefit enterprises. It helps enterprises retrain and reskill their workers. It allows them to quickly train workers who aren't able to complete new tasks due to the dynamic shift in the economy and how the fourth industrial revolution is changing the type of skills that are needed. And enterprises will pay for that because they want to optimize their workforce. They want to be the most efficient as possible. And Coursera is a very uncostly way of doing it versus sending your workers to a 4-year education in terms of masters and so forth. On top of that, people who can benefit are college and universities. They can put their lectures and the courses online through Coursera. People large and prominent universities like UPenn, Princeton, MIT, and Harvard, Michigan Ross, and so forth, all have courses and lectures on Coursera. And these type of partnerships not only benefits the college and universities by getting more people to view their courses, but it builds a lot of prestige and the perception of great education for Coursera itself. On top of that, the government benefits. The government benefits because there are government agencies that use Coursera to upskill workers. There are government programs that require people that help people who are unemployed or underemployed. And by having Coursera, it gives these people new skills and skills that can impact the workforce. Coursera is changing, how we learn and where we learn, and that's very important in 2021 because the traditional learning takes a lot of time, and it really doesn't benefit many people because skills are constantly changing, and Coursera, who has a catalog of educational videos and courses, allows people to adapt quickly without spending 4 years or 2 years for a bachelor's or master's degree. So let's talk about what makes Coursera stand out. So, like I mentioned before, they have a lot of branded lectures and courses from top universities. This makes them stand out in terms of their credibility and who essentially would use Coursera. On top of that, they have a large catalog of courses that people could choose from, ranging from biology, computer science, to business. A lot of courses that, like I mentioned, allow people to work at their own pace and improve their skills that would essentially give them a better spot in terms of the workforce. With employment being so high, this gives people a lot of time to improve their skills and make them more valuable in terms of the workforce. So what's the opportunity? What's the opportunity for Coursera in terms of being the edtech place? So the global higher education market is a $2.2 trillion market as of 2019, and the global online degrees market was around 36 billion in 2019, and it's expected to grow to 74 billion by 2025. And this growth obviously was due to COVID and the lockdowns, and being physically at a college location was limited due to the fact that a lot of colleges were closed, so people spend time whether taking online courses, or people who are unemployed took the time to improve their skills and so forth. And this really sped up the change from traditional learning to a more global online learning instead. So let's talk about the growth plan and the growth strategy of Coursera. They have many ways that I expect to grow in terms of this S1 list, but there are three main things that they focus on: to build a bigger catalog of courses where they can attract more customers and more people who are willing to learn. They look to expand the amount of accredited courses and online degrees that they have that gives them some prestige and give people a reason to take courses, because they need proof that these type of courses are improving skills. And in itself, what if it does that? It doesn't really matter if it doesn't translate to the workforce. So they're looking to have accredited courses and degrees online that will give people a return on investment in terms of spending on education. And on top of that, they plan on expanding their customers in terms of continue to expand globally and so forth. And now let's talk about the risk of Coursera. There are a lot of risks in terms of this business. Some of them very basic, listed on this risk factor summary, but there are a few that stands out that we want to talk about. One is that they have possibility of losing strong relationships with universities and industry partners. For example, universities might potentially start their own online courses and cut Coursera out of the loop. And this potentially can cause Coursera to lose their prestige and their perception of being a great online course that offers reputable lectures and courses. Next is a big one in terms of education law and regulation can lead to future Coursera lawsuits in terms of the accreditations and so forth. It's kind of like what happened recently with the University of Phoenix, where they recently settled with a huge payout to a lot of people in terms of misleading people in terms of the usefulness of the courses they've been taking and the return of spending money with within University of Phoenix. And this is potentially a huge problem that Coursera can face if they don't correctly educate people and potentially mislead anyone into spending money on accredited courses that might not yield the same return. And the last risk that I see is the projected growth of revenue is overestimated. As COVID externalities might not have been accounted for correctly. I'm going to talk about financials next, but this is one of the things that really worry me in terms of overvaluing the business as it is today. So let's jump right into the financials. So in the year end December 31st of 2019-2020, the revenue was 184 million and 293 million respectively. So this is around a 60% growth. This looks great, but like I mentioned in the risk factor, this growth might not be continuous. This growth might have been due to the fact that COVID happened and there was a lot of unemployment. Colleges were closed, college and universities were closed, and this led to people to find other means of educating themselves, which might have been Coursera, and it led to a boom in the edtech and online degree market. And one of the red flags that I really saw with trying to dig through the consolidated financial data of Coursera was the fact that they didn't show their 2017, 2018 numbers throughout their S1. I had to dig around, and there's only a small piece of data that shows this. They cut out all the income statement for it. It just shows basic revenue and basic net loss and so forth. But if we look at 2017, they had a revenue of 95 million. In 2018, 141 million, and 2019, I mentioned, it was 184 million. So let's look at the growth percentage from 2018 to 2019. It's around a 30% growth, and like I mentioned, the growth from 2019 to 2020 was around 60%. So in a way, it might be a little misleading if we just look at the last year growth and we don't account for COVID correctly, and this will lead to analysts and so forth creating pro formas, not adjusting correctly to the growth and expecting the future revenue of Coursera to grow a lot faster than it might, and this will lead to a higher stock price. And if this is the case, it might be overvalued right now. If we look at 2017 to 2018, the growth was around 48%. There's some risk to it because there's no consistent growth, and if we really just adjust for what happened with COVID in 2020, the growth seems more consistent around 35% versus a 60% growth. And if it's at a 35% growth, coming out at is it worth it? What they're doing is they're offering 15.4 million shares around $30 to $33, and this puts, doing some math here, Coursera enterprise value at around $4 billion. What's great that happened is that they had some good anchor investors in already willing to put $125 million at the IPO price of $30 to $33. That's around 20% of the float. It already shows that there's a high demand, and IPOs, we all know, it's more of a supply and demand game because they offer a supply of shares, and if there's not enough demand, the price is going to drop. But it seems like there's going to be a demand for it, and like a lot of IPOs this year, their offering price it's going to be a lot higher than what they state. So if it comes out at $33, expect the $30. I'm expecting the price to be at least $40, $45, and in our honest opinion, $40 to $45 is a little rich, but if it does come back down to $30 and $33, that's only a 4 times multiple on revenue. And if we compare that to Chegg is another ed tech company. Not many public ed tech companies, so this is the one I'm going to compare to. They have a market cap of around 11 billion, and they had a lot of growth recently also, and this was also due to the growth in COVID. That's right here. Yeah, so they had a lot of huge stock price growth also. It's almost like a 2.5 times growth, and this was due to the fact that online education became more prevalent and more prominent. But Chegg As of 2021, the revenue was at 64 million. That's around a 17 times multiple. So what I'm saying here is, if Coursera is under $35, $36, the multiple of revenue should be around 17 times revenue, and that seems pretty comparable in terms of the ed tech space, in terms of valuation. So that would be a good price point entry. And on top of that, just to show the amount of growth that Chegg had this year, it was around 50% from 2019 to 2020. So just to conclude, is this a buy? Like I mentioned, if the offer price stays under $40 and you believe that educational technology is going to change how we learn and where we learn, it would be a good, reasonable buy in our opinion, just due to the fact that the market size and the market outlook for online education is pretty good. It might not grow as fast in the future due to the overestimates of COVID, but it in a way exacerbated the need to change how we re-educate and reskill workers. I like to bring out this crossing the chasm chart for high-tech companies. So where we see Coursera right now, they're more in the visionary, or not even the innovator stage of this map. Once it starts catching on and more people start taking online degrees and online courses seriously in the workforce, early adopters and the early majority are really going to cause exponential growth in this market. And since Coursera is one of the first online educators in terms of course catalogs and so forth, and they're one of the biggest right now, they're going to benefit the most. And potentially, if we ride the wave of the changing education, Coursera is going to be a behemoth in the future if they mitigate the risks that I mentioned early on in terms of the regulations of education and so forth. So that's it for this video. Let us know what you think. Do you think Coursera is a good buy, or do you think we should see if the growth trajectory changes with COVID pains going away? If you like this video, please give us a thumbs up. We use this as feedback as to whether we're making content worth watching. Thank you again very much for watching. Make sure you check out our other videos where we do deeper dives on other stocks that might interest you.